Bazaar Morning Call. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's a Thursday morning and I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. Well, you know, the big question I'm asking is the market correction over? Because we've had some positive cues over the last couple of days. US markets are doing well. So let's see. For today, looks like it's not going to be such a bad session after the good move we saw yesterday.
Well, then the US markets are more well-behaved. So in that context, we'll start off on a firmer note, which isn't such bad news.
Well, let's see if we can sort of take out these ranges, right, which has been 200, 300 point range that the market has been in. Hopefully, we should be able to. Yesterday was certainly impressive. And it was impressive because the market bounced and closed 100 points higher day on day. But from the day's lowest point, the intraday low, it was a full 300-point bounce, right? So 200 to come back to flat terrain and then 100 on top of it when the market picked up pace in the last 60 minutes of trade. So impressive. Now, overnight, you had the S&P 500, which has basically gone back to 5,000 levels. It was up a little less than the NASDAQ. The NASDAQ itself was up about 1.6%. And that is as the US 10-year cooled, 5 basis points or so cool off in the US 10-year. But the fact is, it did not immediately build on the big 14, 15 basis point gain that we saw the day before. It may still happen, but the fact is that last night we saw a bit of a cool off. Now, the other bit, and we were talking about this yesterday during closing the last couple of hours of trade, that there were some Fed speakers which are important because they would have been the first of the lot to react to the CPI numbers, which caused all that mayhem in the US the day before. So Fed speak did not add hawkish fuel to the post-CPI market, right? They'd come and said, well, boy, this is too hot and we need to reconsider they perhaps further push back these rate cuts, which have already been pushed back quite a bit. It would have been a different story, but that was not the case. You basically had a speaker, he's a voter, by the way. He's typically dovish, so you got to take that along. He said that, and this is a quote, not getting amped up on 1 month of CPI data. And he also kind of indicated that, PCE is a more significant indicator as compared to the CPI, which the Fed really looks at. Okay, now the dollar index also cooled off as yields came off. Dollar index was down about 0.25%, just under 105, 104.69, 104.7 is where we left off. Oil prices also came off 1.5%, and we are at about $81.5 to a barrel. There was one other piece of news which, I just want to make a mention of it because maybe it comes up again or it dies down. But in any case, CNN, the news channel, reported that the US House Intel chairman has announced, and I quote from the report, serious national security threats. And others picked up on it and said, well, the serious threat is Russia. It never really went anywhere, and market, maybe it kind of limited gains for the market overall, but it didn't really hurt at the margin, but something to look at as well. Now, just to come back and circle back the levels, for the Nifty, which has, as I said, has an impressive rally, let me just put out the downside levels first, right? 21,489, 21,500 roughly, which is about 350 points away from where we are, will be the important. That's a 40-day exponential moving average. Now, that's got to hold. We should not revisit that once again or even come back into the vicinity of that if the market's got to build higher. On the way up, the resistance is, it's very close by, but 21,489 is the 21,891, beg your pardon, is the 76.4% retracement of the fall that we saw. So roughly 21,900. It's 60 points out, right? And then, of course, the all-time highs, etc., come into view, and that's been the case for a while. The Nifty, the Bank Nifty also continued its pullback and closed around the 40-day exponential moving average. It went past the 20-day, and it's now very close to 46,075, which is the 40-day exponential moving average. That's a very immediate term resistance. And then on beyond that, again, very near-term levels, the Nifty Bank has its daily upper Bollinger Band at 46,160. So these are very near-term levels, both on the upside and downside, but the market has been ranged despite these one-day big moves that we had yesterday. Support for the Nifty Bank comes in around 44,850. That's roughly the low that we saw yesterday and day before yesterday. Roughly the same kind of picture. Again, the idea would be to try and buy the dip, as we said yesterday, puts you in a much better framework in terms of risk reward. GIFT Nifty is indicating a 70-point higher start, but as we've seen last couple of days, you know, the GIFT Nifty indicates big gains. The open is smaller, and that perhaps gives you a bit of an opportunity. Sonia.
Oh, absolutely. And, you know, as we began the show, right, we were, the question that we're asking this morning is the correction in the market over now? And are we sort of going to break out of that trading range? So it looks like it's not only going to be a good start, but the market traction is something that could continue on the upside. I'll tell you why. There was a sharp recovery in the US markets overnight. The S&P 500 is now back at that 5,000 milestone. The 10-year yield has cooled off as well. The US 10-year yield, it's back at close to about 4.28%. There was large buying from domestic institutions yesterday, by the way. DI has bought almost 2,900 crores in the cash markets. And, you know, a couple of these large caps are now assuming leadership in the market. One of them is Reliance. If you look at the chart of Reliance, right, I mean, it has now become a leader in this up move. There was 1,500 crores of delivery buying yesterday in Reliance, and it has now recovered almost 30% from the lows that we saw in the month of October. SBI is the other one. It continues to see momentum. There was large delivery buying of 800 crores in SBI in one trading session yesterday. In fact, this morning, Motilal Oswal has put out a note where they have a buy on SBI. They have a target price of 860, which is well above the current market price. And they talk about how earnings are expected to pick up in FY25 for SBI. We'll try and get some of those graphics for you on the screen as well. But PSUs are seeing selective buying now too. So, you know, whether it's something like a NALCO, an NMDC, a SAIL, all of these stocks have started to see a lot of traction. So, you know, that's another pocket that may come back into action. Let's see. For now, these are a couple of spaces that the market likes, and overall as well, I think the market momentum could start to pick up on the upside, and maybe this range that we're sitting on between 21,500, 22,000 on the upside is something that could perhaps get taken out in the near term.
Well, you know, what's clear for me is that the Nifty Bank, it doesn't want to go ahead and break the 200 DMA. We have seen that numerous times. And the Nifty is not breaking that 21,500 odd mark. And yesterday, the chart will tell you the picture. You know, the last few times we have gone, the Nifty Bank has gone to around that 200 DMA odd. We see a bit of a bounce. Just take a look at that. It's taken support in the past as well. Earlier this year as well, we did almost go there. And from there, it bounced. Now, yesterday, it took out the 200 DMA, you know, it took support out there, and it even crossed the 20 DMA. So now the Nifty Bank seems to have some momentum. I was looking at the institutional flows. Well, the institutions were net sellers. But it appears yesterday there was a bit of a short covering bounce that played out. Keep in mind, yesterday there was weekly expiry as well that played out on the Nifty Bank. So that could be another factor that helped the Nifty Bank in yesterday's session. The FIs, what did they do? Well, there was no big short covering out there. In fact, they added mildly more longs in comparison to short positions, and they continue to remain net short with close to around 64% of their positioning on the short side. The options data suggests that we're still in that range, 21,500 on the downside, 22,000 on the upside, and that's the key, you know, all the active options that we saw in trade yesterday. What can help us break out of this? Today, IT could do fairly well, you know, because you had the US 10-year yields that cooled off yesterday, but the Nifty Bank, that saw a big bounce, a 1,000-point bounce from yesterday's low, and it's crossed the 20 DMA. So that will be the near-term support, the 20 DMA, which is around 400 points away from where it closed. Can it move towards the 50 DMA? Well, that's close to around 800 points away from current level. And Reliance Industries, year to date, that's been a big outperformer. And the intraday chart of both these two tells you the picture, because the Nifty recovers when 40% of the index does pretty well. So that's about the index that we're looking at. The GIFT Nifty is suggesting some bit of green, so you'll have to build on to this start. But we keep talking about the Nifty and the Nifty Bank. The real story, I think, is in the broader markets. And yesterday, your portfolios will be feeling very, very good. Because from the start of trade, you had way more declines in comparison to advances. And by the end of the day, that picture totally turned around. So let's focus on a couple of stocks. The stock of the day for me will be Hoodco. That could be the stock that you could be focusing on. Yesterday, it corrected all the way to around the 20 DMA. And once it corrected the 20 DMA, it bounced off that mark. So Hoodco, from around 225 rupees, it went to 175 rupees, and it took support and bounced in yesterday's trading session. So that's one reason. Technically, it did see a bounce from that crucial level. Delivery-based buying is what we saw as well on that stock. Yesterday, close to around 1 crore shares of delivery-based buying on the NSE. And finally, we had the management joining us a few days ago. They are talking about doubling their AUM in the next couple of years by FY26. And they say by 2030, they're looking at a larger number out there. So keep an eye out on this one. PSU themes have been working. So maybe this stock should be kept on your radar.
All right, thanks a lot for that. So plenty of stocks to track this morning. But on the equities, we have Alexander Redman of CLSA, who says that the January CPI print was the 8th consecutive sub-target US inflation release, excluding the shelter at 1.5%. He adds that the headline and core disappointed US wage inflation remains above the Fed's comfort zone, and thus the market is despairing of its own impatience. Alexander, however, says that the US disinflation narrative remains intact, and they maintain the view that emerging markets can ease out, outgrow, and ultimately outperform developed markets in 2024.
I like that phrase, market is despairing of its own eagerness or whatever, right? I mean, it wants the Fed to cut and it can't wait to cut, and then when it doesn't cut, I mean, it gets disappointed. But well, there's some money market views coming in through as well. On the rupee, this is Parul Mithil Sinha of Standard Chartered Bank, who says that the USD INR rate continues to remain range-bound despite a strong dollar. She expects it to inch lower in the medium term on strong fundamentals and positive Q1 seasonality, and sees the dollar rupee trading in a range between 82.8 to 83.3 in the coming week.
All right, and on the bonds, Parul says Indian rates have moved higher in line with global rates due to higher than expected US CPI. She adds that the MPC last week turned out to be hawkish relative to the market expectation, which also aided the move higher. However, strong FPI inflows coupled with a lower SDL supply continue to support Indian government yields. Parul expects the 10-year benchmark to trade in the range of 7.05 to 7.15% in the near term.
Well, we've got a lot of stock-specific action to track for you. It's the last day of earnings as well. So let's run you through the list. We're looking at NMDC, Muthoot Finance, Sun TV, and Gateway Distriparks. All of them will be reacting to positive news. But on the flip side, Aditya Birla Fashion is a stock that we are looking at. You have Glenmark, Narayana Hrudayalaya, you have Crompton, as well as PTC India. All of them will be reacting to negative news flow.